Hey, this is Matt from InvestiQuant. Today is Tuesday, December 19, 2023. And before I get started here, I wanted to let you know this will be the last daily IQ that we'll have here for a while. I'll be heading out of the office for the holidays, so be taking a bit of a break here. And because of that, we're going to take a look at a seasonality study today that'll be applicable for many of the last days here of December. So we're going to take a look at the second half of December, and we'll take a look at what has happened in stronger markets in the second half of December. Let me go ahead and get this set up. I'm using all four instruments. Setup's going to be based upon entering long at 9:30 a.m. Eastern Time, exiting at 4:15 p.m. Eastern Time. Now, currently we're trading higher, and this opening filter makes quite a difference in this study. So I'm clicking on gap up here from the gap direction. And if I was to click on gap down, the results would be very different. In the price patterns library, I'm going to say that yesterday closed above the prior month high. We've got a very strong month forming already. So from the active today, I'm clicking on close above prior month high. The next thing that I'm going to do is I'm going to go to the calendar library, and I'm going to isolate the second half of the month, and I'm going to do that by excluding a couple different sections. So I'm going to exclude the first half of the month, and that means we can look at the third and fourth quartile of the month together. Lastly, I'm going to say it's the month of December. I'm grabbing that from active today. So this is everything that I want. Now I'm going to click view results. All right, here we go. These are the results based upon entering the market long at 9:30 a.m. Eastern Time, exiting at 4:15 p.m. Eastern Time, when you are gapping up in the second half of December, when you have closed above the prior month high. So you're in a strong market in the second month or second half of December, and you're gapping up. We've got 75 samples here in the S&P to examine, 61 in the NASDAQ, 74 in the Dow, 71 in the Russell. Win rates on these coming in weak for a few of them. S&P just 37% of these closing above the opening print. For the NASDAQ, it's 46%. For the Dow, it's 40%. Russell's more neutral at 52%. If you take a look at the average moves, average move to the downside in the S&P is larger than the average move to the upside. That is also the case here in the NASDAQ, in the Dow, and in the Russell. So all four have larger average moves to the downside, and 3 of the 4 have win rates that are at least slightly weak, with the S&P being the weakest at 37%. That's this blue equity curve here. Hopefully you found that helpful. Good luck today. We will see you next time.